Hello, everyone, and welcome back to our series, Building a Strong, Prosperous Financial Future. I know it's been a while, so we're going to handle a topic that is so simple, and that is asset and liability. Asset, as we know, is something that brings you money regularly, and liability is something that doesn't bring you any money. So you spend your money and you don't get anything back other than what you bought with the money. So an example of liability is that gold chain you bought or the Gucci bag. So it doesn't bring you any money. So we're not going to spend time on liabilities because of what it is, liability. Now let's talk about asset. So asset brings you money back. For example, you buy shares in a company that pays dividend, or you buy a rental property. So I'm going to talk about buying share in a company that pays dividend, and I'm going to use a company called Pfizer Incorporated as a reference point. Pfizer is a pharmaceutical and biotechnology company. It was established in 1849. So you're looking at a company that is 175 years old as of 2024. This company annual revenue in 2024 was 63.6 billion. So you're talking about a solid, well-rooted company. It pays a dividend of $1.72 per annum for a year, but the dividend is paid every quarter. So that is a 7.21% dividend yield. Now, let's assume that you put $500 into this company every month. So that would give you, at the current share price of $24 a share, as of today, September 15, 2025, close to 21 shares. Just call it round up to 21 shares. Let's assume you do this every month, $500 every month, for the next 15 years. And you make sure you reinvest your dividend. From my calculation and digging, that will give you a total of 6,624 shares by the end of the 15th year. Let's assume that the company still pays $1.72 per share for dividend for a year, of course, but they pay dividend quarterly, like I said. That will mean that if they're still paying the same dividend rate of $1.72 a share, you'll be getting 11,393 15 years down the road. That is annually. But from my research, this company actually increased dividend rate every year by 2.5%. So that means in 15 years, dividend per share will be $3.52 per share. So that will give you an annual dividend of $23,316 US. If you translate that into Canadian dollar, you're looking at close to $2,000 a month. Imagine that as part of your pension. And then, of course, you look at other sources of income. So that is the beauty of an asset from the perspective of buying a company that pays dividend. The other asset is a rental property. So you put money into a rental property. If that is where you want to go, then what you want to do is to make sure that this property that I'm buying, a rental property that I'm going to buy, is actually going to cash flow. That is going to bring me money every month. So you take your spreadsheet, you go to a spreadsheet, ask yourself, how much rent is this property going to give me? How much am I going to pay every month in mortgage, in insurance, in property tax, in maintenance, in utilities, and management fees if somebody is handling it for you? And then you now ask yourself, is this really an asset? That is, do you get a positive cash flow, right? That is, after paying all that, is there anything coming into my pocket? Then it's an asset. Then, of course, before you commit finally, you want to look at other factors like, okay, what is the location of this property? Is that a good location? Is that a safe location? Is it close to schools and all that? Then you look at the potential for this property to appreciate. Okay, and you look at government regulation in that particular area. Is that a jurisdiction where government protects tenants more than the landlord, or is there rent control? And then lastly, you look at what they call the exit strategy. That is, if I want to get out of this, is it going to be easy for me to sell that property and move on? So that's where we're going to end today. As you can see, putting your money into assets, something that generates money for you, is way more better than spending money on something that doesn't bring you back anything. Okay, so we'll stop there today. My name remains Adekunle Agishibutu, CPA, CMA. If you like what I'm doing, click the share button, comment and let me know what you think, and I will see you next time. Thanks for your time.